This is the video for Friday, August the 7th, and it was pretty much a nothing day. The McClellan oscillator ticked up just a tiny bit, but you can see that we could draw a straight line right across here, and that seems to have been resistance. We're just chopping on either side of zero. This would indicate that a movement up would be breaking a trend that's been going on since the middle of July. So, it's only been a few weeks, but nonetheless, it's a trend. The volume was the lowest that we saw of the week. And if you take a look at this, you can see towards the end of the week, we really just tailed off in terms of trading volume. But we're looking at some charts. I want to show you some really interesting harmonics that are happening, that always happen in the markets, so that you get a better sense of Fibonacci's and how important they are. Let's take a look at the Dow Jones. First of all, let's just look at this one right here. This is our coronavirus. It's our coronavirus drop right here. And you can see that we've come back up to 78.6% of the high before the coronavirus. If we take a Fibonacci of the lowest point in the Dow in March of 2009, and take it to the high up here, you can see that the coronavirus pulled back to 50%. Let's move it and take a different look. What if we took this coronavirus somewhere between the 50 and 68.1, but this is a nice one here. Look at this double bottom right here. That is important. You'd think that the wave that comes off of this double bottom would be important, and it is. It shows that the coronavirus came down to 78.2% of that wave up. So you can play around with Fibonacci's any way you want. You could even take this one, and you can see that it pulled back to 138.2%. So the stocks, the markets are very harmonic. That's a market. Let's take a look at Apple. Let's look at this Fibonacci right here, which is an extension Fibonacci, which takes this, a low point, this, the high point just before the coronavirus, and then down here, and projects this wave on top of this point. And you can see that we've stopped at 127.2%. What if we move this and we took it to here? Oops, there we go. Took it to, there's 127.2. This one here is 150% where the pullback occurred. If we take this support at the 200, which is important, any bounce off a major moving average like that is really important. And you can see that we stopped at 178.6%. So it really doesn't matter which size wave you use, you're going to find Fibonacci's playing an important role. Even if we take this long wave here and project it off the bottom of the coronavirus, you can see that we're up 100%. So we've replicated this whole move, which is back in 2016, replicated that whole move from March 2020 to today. Caterpillar, this is a weekly chart. You can see this just chattering below this trend line. Home Depot, great stock, pulled up to 127.2 and found resistance there. Now I've got this green dashed line in here because that represents the highs, or that handle on this cup that we saw. We've finally broken out of that cup and handle, and we're really off and running. So Home Depot is a stock that's going even higher. There's another set of Fibonacci's here that I was playing with. If we look at it on a weekly basis, taking this wave here and projecting it off of the December 2018 low, you can see that we stopped at right here. So just a little, that's a minor I don't like looking at minor Fibonacci's all that much. So it just shows that if we were replicating this big wave off of this low point, our next target is going to be 280.54 in Home Depot. So that looks like a really good stock. Whirlpool continues to move higher, stopped at 78.6% on this Fibonacci, which is the X to, let's see, which is it? Let's just highlight that here. It's X down to C. So this whole wave here, this drop, X to C, we've recovered 78.2% of that back to this previous high. So Whirlpool, great stock. It's also going places as well. So that's it for today. Let's just finally look at two more. NVIDIA, 200% of this wave, which goes all the way back to, again, February of 2016, where you can see that that's when the breakout occurred for NVIDIA. If we take that wave projected off of this point, we've stopped at almost 127.2%, but what stopped that was this Fibonacci here, which just takes these 2 points here. This drop has now recovered 200% and stopped. So draw Fibonacci's on your charts and see where it's going. The key ones are 38.2% and 61.8. 61.8 is called the golden ratio. Look it up. Anytime a stock breaks above 78.6%, it's likely to come back down and test it and then move back higher and should go up to 100% if it's following the way Fibonacci's work. Let's see how banks did. They were pretty much, well, banks are not really all doing all that great. One more, Boeing. Boeing, I don't know why we're looking at this Fibonacci here. We really should be looking at, unless we take this high, this point, and this point as being indicative of where Boeing should be heading to, with the exception of this little spike over. That's probably why we picked this point. And we've come back, we've had resistance at 50%. We've come back now to 23.2%. Let's take a look at other Fibonacci's. What if we go back and we do use this one? There's the 38.2% rejection that we were talking about. So Fibonacci's are beautiful things. You know that they're, I believe they're a 12th century invention by an Italian who was observing throwing stones in the water and the way the ripples formed and broke out.